Hey everyone, it's Matt Donaghue with your weekly market update for the week ending October 24th. We're going to jump into it with a little wisdom for the week and then get into our market update. This week's wisdom comes from Seneca, who wrote, "Crimes often return to their teacher." It is one of the great ironies of history because Seneca was the tutor to the Emperor Nero, the philosopher who taught virtue to one of the most corrupt rulers in history. He tried to guide Nero, but as we know, the student turned on the teacher, and in the end, Seneca paid for his lessons with his life. Now, before you tune out thinking, okay, Matt, we're not ancient Romans, remember the lesson. In life and in business, we reap what we sow. If we teach our clients, our teams, or even our kids shortcuts and excuses, they'll learn those. But if we teach discipline, integrity, and patience, we'll see those lessons come back too. Sure, it's karma, but it's also common sense. What we plant today, personally, professionally, financially, determines the harvest we get tomorrow. We've all done something at some point in our life that we're not too proud of, right? And usually, as we all know, that comes back to haunt us. It's the same thing that Nero and Seneca ended up living out. Market recap. Markets closed out the week with a steady pulse. Headline inflation came in at 3% year over year, which showed some progress towards the Fed's target. Manufacturing activity rose 52.2 and the Services PMI jumped 55.2, both signaling expansion. The third quarter earnings season is off to a strong start with about a quarter of the S&P market cap already reporting. Earnings are tracking at 8.5% higher than last year, which is above the long-term average. Tech and communication companies are driving most of that growth, about 60% of total earnings gains, as AI investments continue to boost productivity and cloud revenues. But don't forget, valuations are stretched. When one major tech name beat earnings by 26%, but missed slightly on cloud revenue, the stock fell 8%. That's where we are right now. Good news isn't always good enough. Meanwhile, financials are quietly strengthening. With deregulation and AI efficiency improving margins, banks are starting to breathe again, but we still need to watch the consumer, especially as student loan payments resume and government benefits tighten. The economy is still on solid footing, but next year's double-digit earning forecasts look optimistic. If Seneca were watching CNBC, he'd probably say, "Confidence without caution is just vanity in disguise." Let's pivot from Wall Street to your wallet. Some of you live or work abroad or earn income from foreign sources. Just remember, the IRS won't forget. U.S. citizens and residents must report worldwide income. That means foreign wages, bank interest, or trust income. All of it belongs on your return. You might qualify for the Foreign Earned Income Exclusion or foreign tax credits, but you still need to file the proper forms like a Schedule B, Form 8938, or the F-bar if you hold foreign accounts. And if you're living overseas, you automatically get until June 15th to file, but your taxes are still due by April 15th. Bottom line, whether your income comes from San Antonio or Singapore, structure determines strategy, and strategy determines savings. Talk to your advisor before you follow. There is no out of sight, out of tax. Speaking of protection, let's pivot briefly to something that hits a little closer to home for most of us, and that is child identity theft. According to data, children are 50 times more likely than adults to be victim of identity theft. 50 times. Why? Because kids have clean credit histories. No loans, no accounts, no reason for anyone to check their reports. Thieves can steal a 9-year-old social security number, open accounts, and do damage that won't be discovered until years later. So here's a few quick steps. Lock up your kids' important documents, birth certificates, social security cards. Before you give out their social security number, ask why it's needed, how it's stored, and how it will be destroyed. Opt out of marketing lists so they don't start getting pre-approved credit offers, and freeze their credit with the 3 major bureaus, Experian, Equifax, and TransUnion. In today's digital world, protecting your family's identity is part of protecting their financial future. Because your identity is one of your greatest assets, and your kid's identity really might be their most vulnerable one. Some closing thoughts for you. Seneca's warning, hey, crimes return to their teacher. It's not about punishment, it's about patterns. If we model honesty, discipline, and prudence, those lessons return to us as trust, loyalty, and stability. If we cut corners, those come back too, in stress, loss, or regret. Like I said, we've all done things we've regretted. Usually the stress, loss, and regret is not worth cutting that corner in the first place. At Mission Financial Planners, that's why we emphasize the 5 pillars of financial freedom: income planning, investment management, insurance planning, tax planning, and estate planning. Each pillar supports the others. Together, they help you build a structure that lasts through every market cycle. So this week, ask yourself, what seeds am I planting? Because the market, like life, always delivers the harvest that we've earned. I'm Matt Donaghue with Mission Financial Planners. Thanks for watching. And remember, financial freedom isn't luck. It is discipline, consistency, and wisdom in action. And don't forget, get your copy of the 5 Pillars of Financial Freedom on Amazon. Learn how to build, protect, and pass on your wealth intentionally. Thanks, everyone. Have a great week. We'll see you next week.